All right, welcome everyone. Welcome to another live trading session with the 5ers. And today we have a very exciting episode. I'm super excited about this one because we have, not only do we have the one and only, the masked trader, we have Victor. What's up, Victor? How's it going?
Hi there, everyone. Yes, I know you're excited because I'm part of
I'm
the
both
show today.
exciting
I
and
know.
excited, to be honest.
I know it is because of me, that excitement. So thank you, Jonathan. All of that excitement. Thank you. I appreciate it.
Yeah. All right. You know what? Let's bring Rolf in. Hey, Rolf. How's it going?
Hey,
Welcome.
good to be back. Hello, guys.
Hey. It's been I don't know how long. It feels like it's been. It feels like it was yesterday, but I think it was like 2 or 3 weeks ago or something like that. You went on vacation. I saw you were climbing mountains. Where was that?
It was in North Italy, so just on the border
Oh,
between
nice.
Austria and Italy in the Dolomites. Yeah, it's one of my favorite places. I'm a huge mountain and nature fan, and yeah.
Me too. Me too. I'm a huge nature fan. I'm going up. I'm gonna try next summer. I'm gonna go up to the north of Norway, up in the mountains there. Yes, beautiful,
Nice.
absolutely
That's
beautiful.
still on my list. Yeah.
Yeah. Okay. So what we're gonna do today is we're gonna look at another type of mountain, which is equity curves, trading equity curves. I was gonna say something funny word of play there with Mount Everest and equity curves, but obviously that got completely lost on me. So yeah, Rolf, I think last time you were on, we talked a little bit about the Edgewonk trading journal. And by the way, guys, we're gonna do a giveaway today. We have the link to the giveaway, and the code that you're gonna use with that link is Edgewonk, and we're gonna be drawing 2 lucky winners. One who's gonna win a 5ers bootcamp account, another one's gonna win a yearly subscription to the Edgewonk journal. And not only that, we also have I believe it's a 10% discount code. I believe it's yes, it's a $10 discount code on with the is it $10 or 10%?
It must be $10. Yes.
Yes, it's the $10 discount code. So you use the code 5ers10. Everything is in the description of the video, so make sure you go check that out. And then of course we have all the links to follow Rolf on Edgewonk. On Twitter, follow Edgewonk on Twitter, and then of course the website. But you probably already know all about that. So Rolf, last time you were on, we talked about some of the upcoming updates. You were gonna give like automated suggestions based on a trader's performance.
Yes.
And maybe we could talk a little bit about that. And of course, people in the comments, let us know if you have any questions when it comes to not only trading journals and trade journaling, but also system development, because I do think that system development, edge refinement, and trade journaling goes hand in hand. It's all basically the same thing. So let us know if you have any comments and any questions on that. Well, let's talk about that, the new updates, because I'm very excited about that, because I just went into my Edgewonk journal and I see that it says the best setups last month, the best day last month, best hours last month, and also I see that my win rate has dropped 12% over the last month. So that's very, very interesting. One thing that I'm very excited about is the fact that it's asking me if I'm over trading, and that's really something that I think can be very, very beneficial. It says right here that I've taken twice as many trades this week as I normally do on an average week, and my tilt meter is negative, and that can be a sign of over trading. And that's exactly what happened.
That's a very nice feature.
Yeah.
That's like a mentor watching over your shoulder, pointing out things that are out of the norm.
Yeah.
Yeah.
And that's the goal with this update. So in Edgewonk, you have so much data in it, and sometimes it can feel overwhelming. Where do you start? What do you look for? So the goal for us now is to make the interpretation of your data much more easily with this. So we have 2 different kinds of notifications. The one that you talked about, they come in every Monday and then at the first of every month. So you get a breakdown of what's your best setup and those type of things. But there are also live notifications when we find specific key events defined by data points. So what we have, for example, is if you are closing or on your last 5 trades, if you closed them before your take profit has been hit, although the price would have gone on to your take profit, we will give you an alert to show you that you can trust your trades, your strategy, and not mess around with them. That can be a very big eye opener because a lot of traders struggle with letting trades run for long enough. We also have something where we alert you if you break your trading rules 5 times on your last few trades, so that when you make repeated mistakes, you get an alert. When your losing trades exceeds a certain amount, you will get an alert to tell you that something could have gone wrong. It doesn't have to be, but your loss is much larger than your typical loss. And we are adding new notifications always as we see. We don't want to overload it, but we want to find important criteria in your journal to help you make more sense of the data.
So I actually have my journal up here, and what I really liked was, I went through my journal this weekend, and I did notice that I was definitely over trading here. Like, this was a very, very bad week for me. Like, it's unprofitable. I took 4 trades. Now, on average, my system gives me about 2 trades. Now, I can sometimes take 4 trades. Sometimes, some weeks I'll take 1 trade. Some weeks I'll take 4 trades. But it's above the average. So this does not have to mean that I'm over trading, but I like the fact that the journal is giving me a hint that's saying, like, maybe you're over trading, and the fact that it's saying also that my tilt meter is negative. And what I like is this alert, I believe, got to me on Monday. I've already done my journal review on the weekend, and I came to the conclusion that, yeah, I'm over trading, because I looked at the trades I'm taking, and I compare them to the actual system, how a trade should look like according to system. And I came to the conclusion that 2 of these trades, or maybe even 3 of these trades, are slightly outside of what I would have taken in back testing. And then I come into my office on Monday and I see that Edgewonk is asking me if I'm over trading. So it aligns perfectly with the information that I already have, which tells me that the journal is doing the right thing. Because for someone who does not do that review on the weekend, you're going to get the same result. And that's my point here. It's, creating a structure where, I do believe you should be doing weekly trade journal reviews, but if you miss one, you still get crucial information from these notes here, which I think is very, very impressive. You said something interesting. I can't remember exactly what you said, but you talked about automatic updates. You get updates as soon as certain things happen. Like if you exit the trade too early, so you exit the trade and then that would have hit TP. What statistics do you need to put into the journal for that to actually work?
So you need to have your stop loss and take profit, obviously, and then also the highest and the lowest price data. And that way we can see, has the price exceeded your take profit, and then where was your actual exit? And then we can see, is the exit a little bit too early? And you could have let the trade run to your planned take profit, because that's, I think, where a lot of traders struggle. We've seen this so many times. I do those reviews on the YouTube channel, and I keep seeing that traders mismanage their trades so much, and typically it's closing the trades too early. Another source or what could happen is traders trail their stop loss too aggressively, then they get taken out and the price goes to their target. And those are so important insights, because I think there have been even some research that suggests that traders often lose because they're closing their trades too soon.
Yeah, we can go in and look. We can look at, I think
it's in Chart Lab and then exit analysis.
Yeah, we can look at that. I haven't added everything for the recent trades here, but you can clearly see that my I'm exiting most of my winners way too early. I mean, only few of these are actually full TPs, but you see that
You can see it
only
underneath the graph. Your average updraw on your winning trade on the left is 97%. And then the average exit on your winner is 68% or 69. So the price actually goes almost always to your target on the winners, but you leave around almost 30% on the table per winning trade.
Yeah, the potential here is actually surprisingly good. I only have about 40, well, in this example, about 37, 38 trades, and the result is actually surprisingly good, I must say, from this perspective. But then, of course, it's a bit too few trades. I would like to have at least 100, preferably like 200 trades into this before I can really make a good estimate of this. But looking at a graph like this, we can clearly see that I should let my winners run, and we can also see one important thing that here's the 50% updraw, and what I can see is that if price gets above the 50% updraw, it's always going to run to TP. Now we don't know exactly how that looks in live price action, because sometimes it might go to 50 and then back down to entry and then to TP. But what we know is it has only happened once that price goes above 50% updraw and then down to stop loss. Every other scenario, when you get above 50% updraw, you hit that TP. So right there, we can start thinking about how can we improve the edge of a system like this with that information. And it could be something like, okay, what if I move stops to entry whenever I reach above 50% updraw? Now, again, we don't know exactly what price is doing. It might go up and then down to entry, but it still gives you an idea about what to test. And that's also why I said in the beginning, system development and trade journaling goes hand in hand, because when you backtest the system and you build the system, because we talked about that yesterday, you only get an idea of what's working. But when you put all the data and all the trades into a journal like this, you'll be able to tweak that edge and really optimize that edge. And exactly like Alex is saying, the more data you feed it, the more accurate value you're going to get from that journal. What would you say? I mean, we talked about this yesterday, actually, Rolf. You weren't here, obviously, but what would you say is a good number when you're testing a system, a good number to have somewhat reliable statistics?
So generally, you say in statistics that a decent sample size starts at around 30 trades. After that, you can make some good assumptions. Of course, the more the better. But then also, the more the better. If you have a lot of trades, then the old trades will fall into periods that are not in a market phase that is currently, or that is very far away from the current market phase. So the more trades is not always better. But yeah, I think after 30 trades, you can definitely work with your data quite well.
Interesting. That's quite a low number. I would say that's because Victor, you say 200 or something like that, right?
Yeah, of course. I'm very interested in your perspective, Rolf, because of course you're sitting on top of a massive amount of data, and your perspective is very valuable. But of course, the reason I say 200 or a couple of hundreds is because it depends, of course, on the effect of your strategy has, how profitable it is. If it's very profitable, then you don't need that many to start concluding that you have an edge. But typically at the beginning of a strategy, you don't have it optimized yet, so the expectancy, the profitability isn't that high, and that's why I say have a conservative idea to have it much more higher. And the other thing is, how certain do we want to be of the conclusion we draw from the data, right? Because the more data you have, data points, the more accurate or the more precise you can, statistically make some statements. That's my background. But I'm very interested how you say 30. Do you see this on everyone, or is this more like more often what do you say about this 30, Rolf?
So I think you're totally right. The more the better. But you don't need to wait until you have 100 trades to get some information out of your data. It also depends on what you're looking for. For example, a new trader is probably not looking into optimizing their targets, but at that point, it's interesting as you now pull up the trade management. And there you don't need to have 100 trades to see if you're mismanaging your trades. You will see after 20, 30 trades if you have a big deviation between your actual and your potential performance. And if you're mismanaging that, or when we look into the trade comments, if you see that you are repeating the same mistakes over and over again, that will be meaningful after 20 or 30 trades. If you see on 20 trades, I've broken my rules 10 times, that's already quite meaningful. And that's, I think, a good segue to get into this. You can start with those types of data points from 20 to 50 trades. And then as you have more data, then you will be able to look more into other things like strategy optimization, which is take profit adjustment, stop loss placements, and those types. This also depends a lot if you have 200 trades in your journal, but we have seen in some journals recently, you have 20 setups. So each setup might only have between 10 and 20 trades each. That's also not helpful. So you want to also check that your setup has enough sample size, because you cannot conclude the findings from one setup and take them to another setup, because they will follow different rules, premises. They're trying to capture different market phases, and there's a lot to it. But 20 to 30 trades for the basic stuff, I think, is decent. You will get some good information out of it, but the more the better. Yeah.
I think
That
there's
is
two. I think we're talking about two different things here. So 30 trades to have. I agree with you that 30 trades to have good, to be able to work with the journal, because I think if we go to my actual trade journal here, we'll have something here that's the PCP and the PCR only gets activated after 30 trades, I believe. So of course you need like 30 trades to be able to work with the journal. But then when I'm talking about like developing a system, that's probably the practice or the what I'm working with before I even start using a journal. Like for example, the first idea, I come up with an idea of an entry trigger, and I want to make sure that this entry trigger works in certain markets. And what I try to do in that case is I try to have like 100 different trades to show me that there's some some probability of an edge here. And then the actual journal comes in when on the second stage when I start demo trading. So I think we're talking about different things here.
Sorry.
Yeah.
We have seen
go
that
ahead.
traders have separate journals, because you can create multiple journals in Edgewonk, and they keep a journal for their back testing, where they do their initial testing, like what you have explained. They just try different things, different rules. You can use a custom stat or multiple custom statistics to track different entry triggers. And then once you have refined that, then you can create a new journal and then forward test with this strategy, and then go into that and do the refinements. So it can support you on different steps.
Yeah,
that's
I
very
think
interesting.
it's a fair.
That's something.
Go ahead.
Go ahead, Victor.
No, it's a fair point, because what you mentioned, Jonathan, we're talking about different phases of the process, because one of the reasons that I say you need around 200, one of the other reasons that I didn't mention is that if you're exploring your strategy, you still don't know what needs to be part of this strategy yet. What are the confluences you want to be using? You need a lot of data, because you want to be able to have a subset of this confluence, let's say above I don't know, like EMAs, one above the other. Let's say you want to, that's one way of indicating going long. That's a filter or confluence. And if you want to do that, you need a lot of numbers, because maybe out of the 30, only 20 of them will have that confluence active, right, as an indicator or as a confluence. So the more you have, the better it is. But that's of course when you're still exploring your strategy. Once you have everything in place, you can get to that conclusion earlier without having that many data. And you only, it also depends on what you're trying to answer. Are you answering, is this profitable or not? That's very easy to answer. You don't need 200 to answer that. But if you want to have like, you want to know what is the how can I, what is the, what can I expect from the strategy in terms of risk drawdown, for example, with a, you know, a narrow margin of error, and then more data, of course, is important. But I think it's helpful to highlight what state of the process we are in. Are we exploring? Are we, you know, monitoring our optimized system, or what phase exactly are we in?
Yeah, totally.
Yeah, definitely. So I remember when we were having our last live stream, we talked about this, and I talked about how we can see here that the green line is the potential performance, and basically what the potential performance means here is, what if I would have let my trade hit that original TP, not exiting early, basically. We can see here that my potential performance here is, it's much, much bigger than my actual performance. And I remember this part of trading this system. There was a lot of stress. Like I can remember feeling stress and over trading and not really following my system perfectly. And when I looked into this, and especially the management effect going down, which tells me that my management is bad, what I did here was basically make a plan for what to do. I looked at the exit analysis graph, I looked at the trade management graph, and right here I said, okay, I know what needs to be done, and let's just do that. And now today we're here where my actual performance is above my potential performance, which means that my trade management is working, and it started working from making that plan. And that plan was based on the trade management chart as well as the exit analysis chart, because this tells me that, okay, I'm obviously exiting my winners too early, and my trade management is poor. So having this data is easier to look at the numbers, look at statistics, and actually make a plan for what to do. And it's so interesting how this data in the journal, like for example the tilt meter and the exit analysis and the trade management chart, it all aligns most of the time with my mentality in trading. I can clearly see trading psychology following the same pattern. So if, for example, my trade management goes down and my potential performance goes up, this always happens when my tilt meter goes down. Every single time. There is a direct correlation with me taking trades that are not according to plan and the deviation in this statistics, which is a very, very powerful thing. Because if the next trade you're gonna take, you ask yourself before taking the trade, is this a trade I'm going to mark as according to plan or not according to plan? I think you know exactly what's going to happen with your statistics if you take trades that are not according to plan. So it's super, super powerful to see that direct correlation. And I think that's definitely one of the most powerful aspect of a trading journal like this one.
And it's also such a big confidence boost for you once you realize, okay, my system actually has an edge. If I just follow the system, I could have made money, and my system is actually profitable, but I'm here the weakest link. But once you see that really in front of you, you see that you just follow the rules and you make money. I think you're way more likely to actually follow through on the trading plan. A lot of traders have those feelings, those thoughts. They have a hunch that they're doing something wrong, but if you cannot really see it in front of you, then you're not as likely to change your behavior. But once you see this, it's crystal clear. You follow your rules, your system is working, you are realized by the results, and then you are way less likely to actually interfere with them. And that's the big benefit of having data and seeing it.
I remember reading the book Atomic Habits. I know a lot of listeners here know about the book because I keep keep talking about it. He talks about how you want to create positive habits, and to be able to more easily create positive habits, you want a positive habit to give you a direct benefit or a direct result. And a lot of times the positive habits that we want to create, like for example, start eating more healthier or working out, it doesn't give a direct effect. It happens like in 6 months you're going to get healthier if you follow a diet or whatever. But with a journal like this one, you will actually, in a lot of cases, get direct results. You will see that tilt meter turn red or green. You will see this trade management go up or down, and you will see your potential performance make one tick up or one tick down with one trade. So you will know directly if you're following your plan or not. If you don't have a journal, you'll simply have to look at your progress today and then compare it to where you were 6 months ago. So a journal like this will actually create a structure in the process to create healthy and good positive habits in your trading by giving you that direct result, which I think is very, very powerful. You talked about what interesting thing you said earlier. And I saw on Edgewonk on the YouTube channel, I saw a video where you reviewed a journal, and he had like 25 different setups. And I wanted to ask you about that because have you seen a correlation between the less setups you have, the more profitable you are, and the more setups you have, the less profitable you are? Or is there actually, have you seen someone who has like 20 different setups and actually be quite profitable with that?
On a total account level, I have not seen it. So I have reviewed a few where I've seen 15, 20 plus setups. And what is really interesting to see is that there's once you have a lot of setups, it's also very likely to see a lot of noise in other areas of your trading. You're jumping around a lot. When you look at the notes, you see the confusion of the trader. You see that there's a lot of frustration because he often ends up chasing the market. Those traders often, because assuming you have 20 setups, each setup has 6 or 7 different rules. You have a different scanning process, different trading process, different time frames, different management. That's impossible to juggle, I think. And then you get into this spiral where you're chasing the trade, you become frustrated, you miss other good trades that you could have taken. And that is then often a recipe for disaster. So, and often you will find that you have 20 setups, but 3 or 4 are your money makers. The other ones are maybe break even, slightly profitable, or just losing a lot. And that's for some reason hard for traders to then let go of the setups that are not working. Often I've seen that they're trying to make it work. Maybe it comes from a teacher, or they have read somewhere that other traders are doing it. But I think this focus part is really important. Once you see the data doesn't lie. You could have, and you can do this. I've done it in the reviews. You just filter for the setups that are the 3 or 4 setups that are profitable, and then you see what you could have realized if you just would do that. And that's the more noise, the more setups you have, the more noise, but the fewer setups. Typically, traders are way more focused and concentrated, and it's also much more enjoyable for your trading experience once you don't have all this emotional stuff going on.
When you mention Rolf, actually both of you, Jonathan and Rolf, when you mention 10, 20 setups, do you mean a number of setups open at the same time, or at play at the same time, or do you mean different types of setups that the trader is trading?
So I'm not fully sure on how they actually execute it, but what I've seen is that they have different. When you go to the trade chart lab, and then you have trade by setup, you have so many different setups. So I would assume that each setup follows a different rule. You have maybe trades that overlap, maybe even signals or trades with contradicting signals, maybe around different time frames. They follow different patterns. You look for different things on your charts, and that's what I what it's referring to.
So you're actually meaning not number of setups, actual types of setups, like different types of setups.
Yes.
Okay. So what I understand from you, from what you have observed, is that the less types of setups you typically go after in the market, the better it is for your performance, right?
Yeah, and also for your mental state. Yeah.
Yeah, I think that's a big one, like the mental state, because you'll get overthrown with a lot of different setups all the time, different alerts all the time, and like you have to, it's a full-time job just making sure that you understand all the setups that you're actually trading. I wanted to show you guys something which I think one of the biggest thing that has helped me with this is the entry comment. So I have a very the way I'm using the journal is I'm trying to use it in the simplest way possible, because I want to make sure that I do journal everything and I do everything that I'm supposed to be doing. And if I'm tracking, 20 different things, I know I'm not going to do it. So what I'm tracking is I'm tracking one thing mainly, and then I have some custom statistics and entry trigger, but one thing mainly, and that is the entry comment. And I basically have according to plan or not according to plan. That's all I have. What's interesting here is the equity graph that we're seeing here in our multiple is my current the current performance, right? Now, what happens is if I only show the trades that are actually according to plan, it's just mind-blowing. It's this. And we go from 66 win rate to 85% win rate, which I do know that there's some bias here. I might be slightly biased to when I have a winner, I might feel that that's according to plan. Sometimes I might be blinded by the fact that it's a winner. I don't think that's the case, but it might be the case, right? But you look at the difference here. It's just absolutely insane, okay? So I look at this, and the more I look at this and the more often I look at this, it reminds me to trade according to the plan. So if we switch this off, we basically see that all of this sideways price action right here, and especially the current drawdown that I'm in, is I think mainly the current drawdown. This is where my tilt meter started going negative. This here should have been fewer trades, and it should have continued the equity curve to the upside. And this just knowing that is super powerful. Really.
We Rolf, we saw a smile escape you right there when Jonathan switched from every trade to only to the ones that were according to the plan. Why is that smile? Is this something you recognize in your the traders who trade use Edgewonk, that they have, this is typically the typical effect of measuring what is not according to plan?
Yeah, it's pretty much. So I do those reviews. I've done 14, I think, and a few more in the pipeline. And that's the first thing pretty much I do when I open a journal from a trader. I look at what are their entries. Sometimes it's in the entry comments. Sometimes they have a setup, which is called no setup. And then when you look at those, it's always the same. Yeah, traders could have made money, but as you said, there can be a little bit of bias. But if you keep it really streamlined, like you have, and very clear, you have two comments, yes or no, according to plan or not, I think you are less likely to have a bias. It could still be there, but this is the general correlation I see. I think in 95% of all the journals that I open from our users. Yeah.
Why
Perhaps,
is that though? Like why? Yeah.
What you can do is to label the trade right away after the entry when you don't know the result yet. If then you can you can eliminate that selective bias if you think that could be an issue.
Totally.
Yeah,
Also,
yeah, but the problem is though that I usually realize it after the fact. I usually realize so the process I have, and also I do automatically import my trades from MetaTrader, and I think it can import open trades, right? It can only import after they're closed, right?
MetaTrader also imports open trades.
All right. So if I have an open trade, it's gonna get imported into Edgewonk.
As soon as you open a trade, it will get imported. Yeah.
All right. Okay. So I'll have to look into
MetaTrader
that
4 or
because
5 are you using?
5. No, 4, 5. Do we have 5 or 4, Victor? Is it 5 or
The
4 with
5.
5ers?
The
5.
5
Yeah,
Okay,
is a
5 I'm not
entry.
100% sure. 4 things as soon as you click open a trade, it's in Edgewonk. MetaTrader 5, there are intervals when it syncs.
Yeah, yeah. And what I do is I actually just, because I take so few trades, I actually just use the test function, right? So I click test and then it sends the reports. I don't have a interval. But yeah, so the problem there is that I can only put in the entry comments after the trade is actually closed. But that's not really a problem because I put in all these entry comments at the end of the week because then I'm disconnected from the actual trade. If I'm going to put in an entry order right when I enter the trade, it's I sometimes might still be in that emotion that led me to enter the trade. So I'm just going to mark it as according to plan. And then at the end of the week, I'm just going to say, you know what, this was actually not according to the plan. So I do it after the fact. But what I do though is I don't have that note here now, but I usually, in the past, I had my screens just filled with post-it notes, and one of those notes would say, is this trade according to plan? In the learning phase, I would have like one which just like sometimes I put the sticker like right on the screen. So every morning I come into the office, like one big fat sticker on the screen saying like, is the trade according to the plan? And things like that actually work. So I try to ask myself before entering the trade, like, is according to the plan.
I'm sure many people. Go ahead, Rolf.
Sorry. Another thing that I've seen is a lot of traders reserve a custom statistic for their entry rules. And then they will just list all of the entry rules that they need to get into a trade. And then they just tick it off one by one. And then you will see, is there an entry rule missing that is mandatory or not? That way you can also take out the subjectivity a little bit. My favorite book, trading book, is Pitbull Champion Trader from Marty Schwartz. And what I found so fascinating, he was trading for, I think, 40, 50 years. And after his decades of trading, he was still using a physical checklist. So he wrote in the book that he wrote his trading rules, printed out and laminated it, and then you would just tick off your trades. I think it's very similar to trade report cards that some trading firms require you to fill out when you open a trade. That removes you a little bit from the action and shows you right in front if this is a trade that you should be taking or if you're missing.
You know what?
something.
I'm gonna do that. I'm gonna print that out. I'm gonna laminate it, and I'm gonna have these like, what is it, like whiteboard pens,
Markers.
whatever you need. Yeah, like markers. That's actually a great idea because then I don't have to. Because I do have my physical journal, and in that physical journal, I had a good habit in the past where I actually had a physical checklist. But that's obviously it's not easy, and again, like if you want to create a good positive habits, you want to make it easy, and you want to make it accessible and easy, and also have that instant gratification of doing that. That's actually a really good idea, and I can't believe I haven't thought about that before.
It was my idea. I took it from the book. I highly recommend the book. It's really, really a great read.
What is it? Pitbull
Champion Trader, something like that, from Marty Schwartz.
Oh,
Marty Schwartz is one of the market wizards, right?
It is.
I think he was featured in the first one.
Yeah,
it was Pitbull Lessons from Wall Street Champion. Yep, I'm getting that one right
really
after
good.
the
very, very practical book. I like it because he gives a lot of insights into his day-to-day trading.
I'm gonna copy paste the name in the comments here. Okay, Henry, thank you. That's a good one. Henry's always one step ahead. You should get a good camera, and you know what? Send your resume to the 5ers. Maybe you get a moderation job here in our YouTube channel.
I think the topic is very, very, very important because that is I'm not sure if it is but at a certain the most important thing, but at a certain phase in your trading career, it becomes the focus of improving and maintaining performance, which is, am I following the plan? And everything that helps you and to maintain that is a game changer. And that's what you're saying about the, physical card. Maybe something very simple, right? You wouldn't think just a physical card where you move your hands. It's the same effect that we have with, physical diaries, right? It has a different effect psychological on you. Instead of just typing, that you're actually forming the letters by hand. It's more immersive, I guess. But going back to the actual point is the gap between your strategy and you executing it. That gap, minimizing that gap, is a huge thing for not for everyone, because at the beginning you're still building your system, but at a certain moment when that phase is over, that is the focus. And I think everything that could help, especially what you mentioned, I think that could help a lot. The checking off of boxes before entering the trade, making it dependent on something that is outside, something external, basically, right? Because you have to, the decision to enter the trade doesn't depend on just you making the mental decision to take the trade, but you actually have to do a certain number of things and check them off before you execute. And I think that is powerful. That is very, very powerful. I mean, I'm sure people have seen this, but I've seen that in my trading as well, that when you focus on making it more objective, each step, where you don't have a doubt whether or not it is a signal or not, that makes a huge difference. Wouldn't you
Yep.
agree, Rolf?
There's a book called Checklist Manifesto, and they talked about how specific sectors and industries introduce checklists into their processes. For example, they were talking about surgeons and pilots. And in both cases, they were able to show that by introducing checklists for pre-flight checks or pre-surgery checks, they were able to reduce the amount of accidents and mistakes, and just the success rate went up so much. And I think one of the big reasons is that if you are doing something on a daily basis, you have to repeat it hundreds of times or dozens of times. Traders often think that they know it all, and then they will skip over it, or they just forget things, or they might think, I know better than this, I've seen this, even though it's not meeting the rules. So having this, as you said, this objectivity, and just taking one step back before you actually hit the button to pause and reflect, is this what you should be doing, is just so helpful. I use checklists in my day-to-day work as well. Every Sunday, I sit down and write down what needs to get done for each day of the week. And then I see, okay, at the end of the day, what did I do? What didn't I do? And then at the end of the week, I can see I get way more done and I don't forget things. And it's really helpful for many different areas.
Yeah, I totally agree. I mean, everyone who has tried out to-do lists knows that it helps you organize, also prioritize when you have the list at the beginning of your working day or whatever, that you write them down before and organize them. But if you don't have the list, it's going to be very difficult to do that mentally. So I certainly agree with that, Rolf. There we have Jonathan joining us again. Yes, you're back.
Yeah, I don't know what happened. Connection.
Is this that's the book, right, by Atul Gawande?
Yes, it's really famous. I talked about this with Dr. Steenbarger in our podcast as well, and he also obviously knew about it. It's really, really helpful for all types of industries and trading.
Yeah, I read that book. It's once again, it's one of those things where it's like, it's so simple, and you read the book and it's like, can't believe I didn't think about this, right? It's because it's basically as you create checklists, right? And yeah, it's really it's a really good book. I was actually looking at Amazon. I was gonna order one of those laminators because I got like I and then the internet just broke down. So I don't know if that's a sign. It's probably a sign to maybe do some more research. Look at the look. Don't make those impulsive trades.
Going back to the checklist, with surgeons, it helps. I don't know if it's in the book or not, but I know this from other sources that it helps amputating a wrong side of the limb, right? The wrong limb, basically, and that's something very simple. I mean, it looks obvious which one is to be operated upon, but one of the things that surgeons do, they go when the patient is still awake, and they mark, actually with a marker on the leg, let's say if it's the leg, of where they're going to be operating, just to make sure that they have the right leg, because on the OR, the patient is no longer there to say, to correct if 1 in 1,000 chance or 10,000 chance that there is a mistake, that the patient can't correct anyone there. And some
And it's
things you
way more, it's a much more high risk field than clicking buttons for buy and sell. So it makes sense.
I don't know.
Just like flying planes, you need to have that checklist because the reward or the risk is much higher.
But I think you need to look at trading as if it would be that serious, because if you really want to make it in trading, you have to be at that level to really be that disciplined. Now, of course, as a doctor, if you don't check that, like, somebody's going to die, and if you're a pilot, well, then you're going to die, and then everyone else on the plane. But if you're a trader, you're not going to die if you don't follow that trade checklist, but you're going to lose your money. Like, you're going to lose your capital. You're going to lose your possibility of actually making any money. But yeah, I think in that book, the Checklist Manifesto, they actually talked about the surgeons and how they have a checklist like that. I remember I read somewhere also, and I know Brett Steenberger, like, when you interviewed on the YouTube channel, he talked about how some traders or some fields you point that what you're going to do, and then you say it out loud. And I think it's in Japan, they have, in the railway system, they have the people operating on the platform, they point at whatever they're doing, and then they shout out. So for example, when the door is closing, they point at the door and they shout out, "The door is closed." And then they point at whatever and say, like, "That side is clear," or things like that. And it's not something that I've tried to do, but I've seen some people do it in trading, and it works quite well. Like, they're pointing at a setup and they're saying, like, "I'm going to take that trade because of this and that." I'm pressing the sell button, and they're actually pointing at the screen. And that takes you out of you out of that impulsiveness. So if you're about to make an impulsive decision, it takes you out of that state of mind and into reality. So I think there's a difference between that. Basically, what you're doing is you're entering that rational part of your brain. There's a lot of things like that you can really do to improve your trading.
Right.
Because
I was asking Dr. Steenberger about this because of I got really fascinated by the topic of the subconscious mind and how we always keep stuck in those same thought loops. And to get out of those loops, I think it's really important. Otherwise, you will just run your life on autopilot very often. And yeah, I think I've seen it a few times. Traders, they narrate their setups. They talk about, okay, is this on the daily time frame? I see this, and on the lower time frame, there's this happening. I need this criteria, and this gets you out of this subconscious, and where you're not fully processing what is going on.
Yeah, I know.
Yeah,
We talked about in the
agree.
beginning that I wanted to talk about your trading as well, and maybe you can show us some things about that. But I don't know if we're kind of running out of time. But if it's okay with you, I would love to. You know what? Maybe we'll do that next time. We'll bring you on another time, because we already done like 50 minutes here. So we're probably gonna do that next time. I hope that's.
Henry has a very valid point here. Henry is presenting it as a little bit tongue in cheek, but where he checks, for example, the oven, 3 times before leaving the house. And I'm sure many people recognize things like that. You want to be extra sure for something that has high risk, right? And I think I'm not sure if Henry is saying that he says this out loud. The door is locked, but I think what he's saying here, if he is mentioning it to say it out loud, is actually very helpful, because
Yeah.
by mentioning it out loud, you're forcing yourself to be more aware of the fact that it is locked, and you when you walk away and you say, "Oh, did I check it?" And but by saying it is it helps you be aware of the fact that it is done or not. I think that's a very good point, Henry. Thank you for that.
Right. Taking it one step further, I have a friend who actually takes a photo of the oven before he leaves, so he knows. Because sometimes
That's
you
a good
just do
one.
it. Yeah, because sometimes you look at it and you're not fully sure after an hour, and then you freak out. So if you just can see, okay, this brings you another step out of this unconscious where you're not
Yeah.
fully present, I think.
In the future, whenever my fiance says me to look for something because I'm notoriously bad at finding things, I'm just gonna take my gallery on the phone, my specific folder that I have in my gallery where I've taken a picture of everything that I should remember, and I'm just gonna look through it. All right, that's where that bottle is. So,
Right.
that was fun. Yeah, no, that's actually a good idea, because what I do is I leave the house, I get in the car, we drive about 100 meters from the house, and then we ask each other, is the oven off? And then I say, well, it's probably off. We drive 500 meters extra, and then we have to drive all the way back, because obviously none of us knows if the oven is actually off. So that's a very bad routine that I think I need to change, because we're basically driving one extra block every time we leave the house to make sure that the oven is off. So I think I need to actually start
And I,
by pointing at the oven, or just taking a picture. That's a good one. Taking a picture of the oven, so my gallery is just going to be full of ovens.
Right. And if you want to bring this back to trading, I think I've seen it many times. Traders they click the buy instead of the sell button, and
Yeah.
stuff like that. They forget the stop loss, take profit, and that shows you that you're not fully present. When you are just tabbing around, you're working at something, you're watching a YouTube movie, you're listening to a podcast, and then you're not fully present. And then I think a lot of bad things can happen in your trading. And those are just so avoidable beginner mistakes that needs to be avoided. There's no reason why you have to take those trades. They are just easily avoidable trades.
And I think everyone has done that mistake, or mistakes like
totally.
that. Click and sell, market selling instead of buying, and then you wonder, like, why am I in profit on this one? I shouldn't be, and then you see that you shorted instead of you going long. When I don't do that mistake anymore. Like, I have a structure where it shouldn't be possible. But what I've done recently is actually entering trades with the wrong lot size, or a higher than average risk. If you're lucky, it's going to be lower than average risk. But I remember I added a 0, which obviously took the risk from 1% to 10%, and lot size from 4 lots to 40 lots, which is like just insane. And I remember, like, I did that actually live on this show when live trading with my personal account, and I remember seeing the profit it should have been like 30 $30 minus, or 300 or something like that, and it's like 3,000, and I'm starting to panic a bit. Then I'm lucky that it got back to entry, and I was able to exit for a small loss. But what that did was obviously a huge mistake, and I had to look at what happened, in what scenario did this happen, and how was it possible. And then I remember me and Victor talked about it, and I put in extra like safeguard into a MetaTrader with the position size calculator that I used to enter the orders. It had a setting where you're a max lot size setting, basically. So if I have a too high of a lot size, it's not going to execute any trades. And I think things like that, if you can have things like that, it's also very important to try to automate something like that as well. But if you don't have that, just point at the lot size and say, okay, this is a two lot position, right? Instead of 20. So if you point at it and you actually say out loud, this is 2 lots, then obviously that's not gonna happen.
And and a physical checklist can help you with that as well. If you know, okay, one point on your checklist is your position size, then you can see it right away. You can double check, is this the case or not? Because if you screw this up, it's bad in both ways. If you win, you can very easily adopt bad habits. You see, oh, I can just trade more. If you lose, you might up chasing that loss for the next month, because if you 10x your risk, then you have 10 trades or whatever many trades you need to catch up on that. So it just creates a very bad environment.
Yeah, I wish it would have been on the other direction. It would be really nice to have a 10% winner in that small of a move, but it's never in the right decision. Like, you make a mistake like that, I've never made more money by making mistakes like that. It's always the other way around.
The thing is, once you open the trade, you're already in minus because of spread and commission. So it's price has to really go your way fast for you to see quickly some profit.
Yeah, and the best thing you can do is when you find out you made a mistake, just close that trade right away and reward yourself for acting fast. I think that's the best habit to build, because mistakes are going to happen sooner or later. Or you take a trade that you see, oh, I shouldn't actually be in this trade because I overlooked something, or there's news coming, I shouldn't be in this trade. So you close it right away, and you'll be very proud of yourself that you followed through and not just waited for whatever it's going to happen to you.
Yeah,
I think
that's a very good advice. I have learned that the hard way. Hope in trading shouldn't have a place. Hoping that it goes your way this time around is not a good strategy. I know that for sure.
Totally.
Yeah, definitely. All right. I think we're coming up to the hour here. I think this has been a really good discussion. And like I said before we went live, I don't really have any solid plan for this kind of podcast ish live stream, because I feel like when Rolf comes on, we always have so much to talk about when it comes to journaling and the psychological aspect of trading. And I think I would love to have you on once again, but then next time maybe talk about who you are as a trader and you're making money money in the market, and then also try to integrate how are we using Edgewonk in that, and what role has trading psychology with that.
Totally, yeah. Always happy to come on. It's always very fun to chat with you guys.
Nice. Okay, so we have again, guys, we have the giveaway. Rolf has been kind enough to give away 1 yearly subscription to the Edgewonk Trading Journal, and from our side, we're also going to give away a bootcamp account as well. So you can go in the description and click that giveaway link.
Those are two separate giveaways, right?
Yeah, exactly. We got two winners. So
okay.
One gets an account and one gets a Edgewonk subscription, a yearly subscription. Rolf, how if they want to see more from you, where can they find more about you?
Probably YouTube is the best way. I've been pretty active on the Edgewonk or the TradeSight YouTube channel. I'm not so much on Twitter anymore, and that's pretty much it. I'm not on Instagram. Lots of fake profiles on Instagram, unfortunately, but
yeah,
YouTube is the best way.
YouTube is the best way. I agree with that. And with that said, I actually do not have the link to YouTube in the description, but I will add that during the course of the live stream. But you'll have access to Rolf's Twitter and Edgewonk Twitter, and you'll have links to YouTube there as well. But I will add your link to YouTube. All right, Rolf, it's been a pure pleasure having you on here today, and I do look forward to having you on once again. Well, we do more of a deep dive into maybe more technical analysis and that sort of fun stuff.
Thank you for
having me.
Go ahead.
No, I just want to thank you for having me again. It's always I'm always happy to come on. Time flies when I'm here, so very good times.
It really does. It really does.
It is. Yeah, yeah, really. Thank you, Rolf, for your insights. That's what I wanted to say. And before you go, do you mind sharing with us what's that medal that's shining behind you? There's a medal right
Oh
there.
yeah. I do, or I started not ultra, but trail running.
Okay.
As I said,
Wow.
I love mountains, so I got into trail running. I think this was Salzburg. I was in Austria last year for a run in the mountains. Yeah.
So
Nice. Nice.
how fast are you on 10K run?
I don't go for speed. I think I let this to the younger guys as I get more older. I focus on
All right.
distance, so I like those long distance runnings. Yeah.
How long do you usually run? Let's say it's Sunday. You feel like I might go out for a run. How long do you run? How
So
far?
every other Sunday I do like a 25 to 30K around here.
Wow.
And then twice a week I do somewhere between 6 and 12K during the week.
Nice. Okay, so funny story. This summer, so the first time my longest I've ever ran was like 8K. So I had this idea to run a trail race of 15K. That was the worst thing I've ever done in my life. Very nice to actually get past the finish line, but lay like a 15K trail run. I've never ran that far in my entire life, and that's not easy. That is not easy. Trail running is very, very difficult.
Yeah, you need preparation, definitely. It can be very hard on your joints and ligaments and bones because of all the ups and downs and the roots and everything. So yeah, you need to start slowly, but if you don't put too much pressure on yourself and you don't overdo it, then it's a lot of fun. It's a great way to recharge on the weekends, to get out from the screen, go to the mountains. It's where
Definitely.
you find a lot of energy, I find. Yeah.
All right, Rolf.
We
It's been great.
we're three guys here who loves running because I run too for as a sport. So I'm not a professional or anything, but I mean I do it quite frequently. So I'm enjoying here my ears listen to you guys talk about it.
Yeah, so we have
Nice.
something more to talk about next time.
Good.
For sure.
Let's start a running podcast. All right,
To me,
Rolf. Thank you for joining. See you next time.
See you next time. Thanks again. Take care.
Take
Thank
care.
you. Bye bye.
All right, that was good as always.
That was great, man.
I love having Rolf on. Very good
Yeah.
stuff. I feel like we talk about running, and I feel like I really love to run, but
You want to go now?
like yeah, no, like I feel like I was so like I was kind of like in the best shape of my life back in like probably I don't know like 2017, and it's kind of like slowly going downhill from there. I really need to get. I should probably focus as much on my physical health as I do with trading. That would probably. Man, trail running is fun, but I would never be able to do like 20 or 30K. It's insane.
Yeah, that's a very long. But I think you have
Yeah.
to progress as a runner to do that. I mean, we know that even though we don't run that much, that long, that far, even with single digit numbers, you have to progress through it because otherwise you will hurt yourself. It's and I suppose that it's the process of the same, right? To just continue going much further away. And I really like running, so it's nice to hear him tell that. I really didn't know what he was going to say about the medal.
I thought it was gonna say like some trading
Okay.
trading championship maybe.
I had no idea.
Why would you want to have MetaTrader 4 when we have MT5? I think MetaTrader 4 is like super outdated, isn't it?
Well, the thing is, some people have EAs and indicators, maybe
Right.
custom indicators that are that are specific for MT4 and that are not made or not available on MT5. That might be a reason.
Right. Yeah. Of course. Yeah. That would be no. We I don't think we have any plans to. We don't have any plans at this point to offer MT4. I believe we're going with MT. 25. And also a quick comment. You know, it with the situation, like me and Victor, we're not in Israel. We're not from Israel, but the company has offices in Israel as well as in the UK. And when it comes to the infrastructure with all the accounts and all the funded accounts and everything, there is a very clear structure on and protocols for all the accounts and all the infrastructure and everything. It's running automatically from not from within Israel. So the operations and the servers and everything is there's nothing to worry about here. Most likely there's nothing going to happen, but if something were to happen and there would be a minor disruption of services, then everything would be running smoothly. New accounts can be created regardless of what happens in the actual headquarters of the company. So just to make sure that everyone is aware of that. Quick update on the trades, my trades for the week. We had a trade again. We updated on. We had CAD JPY this Monday. An incredible move right here. Incredible right here. I think we're probably going to come up and test that high. That would be a really good trade, like 2.2 R trade right there. But then you guys know that I'm using a negative risk reward ratio. The other trade that I took this morning was on GBP JPY, and I'm going to show you what that trade was based on. That was trade on based on this structure right here. So we can go back to the daily, and we can look at the daily trend. Now, to me, this is almost picture perfect. Now, what would be picture perfect would be something like this, but it's pretty much picture perfect. You're never going to get that perfect price action market structure in the market, but it's looking really good here, and we have a break and retest here of a daily level. So whenever we have a daily break and retest of the daily level, we're going into the 4 hour, and I do see a possible break of structure right here. So what I'm watching is an uptrend range, and then it forms like a downtrend, or at least breaks the low of that range. And at that point, I go into the 4 hour and I look for a break of structure. And we can also look at the 1 hour here, where I believe there is a good reversal pattern going on right here with sort of a double bottom formation. I don't really look at the 1 hour, but sometimes I like showing the 1 hour just to show you that when you have something like this in the 4 hour, it's usually going to look like a break of structure on the 1 hour. So we have a good 4 hour candle closing right here, and I decided to put in limit orders on this level right here. Now, unfortunately, looking at price action right now, it went straight through that level and closed the 4 hour candle below. But looking at the lower time frames, I still see a possibility of price moving higher at that high time frame level. So that's the trade I'm in right now in GBP USD. And if we move below this wick right here, I will have an alert activated, and I will start looking for an exit of this trade below that level. I also have an alert here which says if it breaks out again, I'm gonna move stops up. Excuse me. Okay.
EU has been moving lately in the last couple of minutes. Before the news, right? We still have, I believe.
Do you guys remember? Sorry to interrupt you, but do you guys remember? I told you that the low is going to be that level right there.
I remember you said that. Yeah.
Yep, I said the low is going to be right there. Where did the low come in? Just a couple of pips lower. That's crazy. As a magic right there. Actually, no, it's not magic. It's just an untested, clean, naked level. Yeah, EU. I suspect EU is creating a to create it. It's oh man, it looks like it's creating a bottom formation here. What I'm trying to say.
On what time frame is that? On the 4 hourly?
Yeah, I'm looking at the 4 hour right now, and I'm looking at basically the reaction to this level right here. So what we see is I'm seeing, you know, this type of pattern where you have a you know, a move that kind of looks like this, thinking maybe we'll move higher. So I think this is a I think this is a good reaction.
Mm-hmm.
It's holding.
Mm-hmm.
Go ahead. What do you think?
Well, it's tricky, and in the background, I'm making something visible here for the people in the audience to see before I go and show it. What I see is this. These are the considerations that I have, and it doesn't mean that I know more or I have an idea what's going to happen, of course. But this weekly, this line with the W on top of it is the weekly ATR. And we are beyond that. That's the low of the week. So we are about, what is it? About 40, depending on your value of your ATR, about 40 to 30 pips beyond the weekly ATR. Now, that isn't exactly like very strange because this week is high volatility week, right? We have ADP today, we had, and we are having NFP Friday. But that is one thing. So we are already, in terms of averages and ranges, we are a bit stretched. And if we go to the H4, what I see is indecision, because what I see is we have the market came down very impulsively, and but we never had any buying interest coming in. Look at how clean the impulses were to go to making going lower, right? And as it came in, it was unable to close, let's say, a bullish engulfing here. If you go to the H2 as well, it wasn't able to do that, right? While after such a long run, it should be easy to it should be relatively easy to form bullish structures, because the sellers are, everyone is selling, so it's easy to push sellers out of the market and form those bullish structures. But it wasn't able to do that. That to me is sign of weakness, right? At the end of a strong movement, it isn't able to amount any form of bullish interest. That's one thing. The other thing that I see is this: we have a bullish order block, right? That's bullish, right? That those two candles, and then followed by a bearish one. And so it means that, to me, it's telling me that the market is going sideways and going one way and then the other way. And this is typical before high impact news, right? So a day before, sometimes the same day, the market is indecisive. It tries to goes up, form structures to go up, but then it doesn't get follow through. It goes the other way, and it does this go back and forth. And these are dangerous times to be trading, because you don't get any clarity which side is actually winning. So I would say keep that in mind, that it's not as clear. If anything, I would think that it's going to go lower because of what I just mentioned, the fact that it had that kind of a movement and wasn't able to sparkle buying interest, at least not directly. It took the next day, this morning, to get some buying into the market, but that buying was immediately in the following bar was sold heavily. Not just any engulfing, this engulfing closed below the low of the previous bar. And so that's interesting. But if you look at intraday, you can see that there we had a little blip here. And I think that's interesting, because if you are a buyer, if you're looking to buy this market, this looks very interesting. Like, the market has peaked interest in for some traders to go long here. Apparently there's this structure either to the left, or maybe the time of the day it is, right? It made a lot of buyers to come into the market, but this doesn't rhyme with the higher time frames, right, where it isn't very clear where it wants to go. And being a buyer, I don't see any advantage, at least not that much of an advantage at all. So it's what can I say? I'm a little bit cautious when the market does this, like barcode kind of candlestick combination where it tells you to go long and then it tells you to go sell, and sometimes it does that back and forth. And typically what happens is it will trap traders into thinking one way to only run them over going to the other way later on. So I would be very careful if you're considering participating in the market today. Be cautious, be aware of that that NFP is around the corner, and maybe it's treacherous to be trading these days.
That's interesting, but I mean, if I get a signal, I'll take that signal, even though we have NFP coming up
I took a
on Friday.
I took a long and I lost it. For those who recognize how I trade, I took a long here, and of course that was stopped out. But I'm still aware that I want to be extra careful. Either I accommodate with the risk or the number of trades that I take, or I become more selective, because the price action isn't as clear. I have a short. I had short signals as well, and that's typical. When I see short and long signals, I see the H4 doing what I just explained. I know that this is. I recognize this kind of price action, so I take them, but I'm aware that typically I will lose quite some before I catch the actual move.
So you're saying that when you see that specific price pattern on the 4-hour, it might have lower probability.
Well, I haven't figured out a way to optimize and to avoid the losses, because it's very difficult. I haven't found it out yet, any way to avoid them. So the thing is, I got signals to go short first, and then I got a buy signal, and I took both of them. But how do you know which side will win? I have no idea. I don't think there is at least I haven't found any way to which one it is. If your signals are coming on both sides, I just take both of them, and it's fine. I lose one or two on one side, and hopefully I win 5, 6 on the other side, and they compensate for each other. But the thing is, it may not be just once. It may do it again. So it gives me it takes me the short out, and then gives me a long signal again, and maybe it's on the third time. And the more times it does it, of course, a certain moment it's not profitable anymore. So I'm aware of that, but it's still profitable for me. So I still do it. I still take both trades and all the signals that I have. I just I'm extra careful to see, do I really want to, am I getting to my risk limits or not? If I am, then I need to do something about it.
We have an interesting comment here saying that 71% is long on EU per the My FX book sentiment. Now, I don't know how My FX book is calculating the sentiment. Maybe they take data from position? Yeah, maybe they take data from a basket of brokers, probably, maybe. And then they look at open positions. So it's actually interesting. I never look at this, but well, let's take a look at what this is live here. So on My FX book, we have something called market sentiment, and I guess what it shows us is the ratio between people buying and selling a specific currencies. If you look at your USD here, you can see that we have 71% being long and 29% being short. So the idea is then, okay, what if, and it's even bigger on GBP USD, we got, well, it's actually the same. So 71% is long EU, while 71% is short GU, which is weird. That's a very weird ratio. And if you go back down, here, you'll see that on EG, 95% is long.
Oh.
Yeah, that's bad. Like I could probably short that only on this. Because like if you think about it, apparently 95% of people are not profitable. 95% of traders are not profitable. So if most people are long EU, wouldn't it make sense to short the EU? Now, I don't think that makes sense, because I don't think that 95% of people are unprofitable because they get the moves wrong or they get the trend wrong. Because remember, the fundamentals of technical analysis is actually quite simple. Higher highs and higher lows, that's an uptrend. If you know even just a little bit about technical analysis, you know that's that to be true. So if EU is in, for example, an uptrend, then you might have a lot of people going long on that uptrend. And they might all be right. Price might continue the uptrend to the upside. So most people get the direction wrong. But the reason why they're not profitable is not because they're losing on every trade or they're losing on this specific trade right here. They're not profitable because they're taking profits too early. They're having more, their losers are bigger than their winners. They might have a positive expectancy with their system. They might have a win rate of 60%, but their losers always hit stop loss, and their winners is, they take profit too early. Things like that, I believe, is why people are, there's a high number of unprofitable traders. So there's much, much more that goes into this than just people's positions, because 95% of people are not getting the moves wrong or the direction of the market wrong. They're simply they simply do not have a good process for trading. So if we look at do you think there's any truth in that, what have you said?
Yes, I think the pitfalls of many retail traders is not being prepared, not having the first pillar in place. And by that, I mean having a solid system that is validated on data and that is actually profitable. I think that is already one of the biggest reasons why the average retail trader isn't profitable. And the other is maybe they have a profitable system, but they don't have a profitable, or not a profitable, a consistent process. You can have a profitable system and not being consistent with it, with your risk or your execution, and still not make it. So I think what you mentioned is for certainly true. It does not necessarily mean that because they are unprofitable that they're wrong about the direction. But
this is insane, though. This is insane.
Could you
95.
Yeah, could you put back the sentiment page that you just showed us?
Yeah, I just wanted to say something, because I just looked at the percentage of people being long on EG, Euro GBP, is 95%. Look at this daily trend. 95% of the positions are long. Why on earth would you think that going long here is a good idea? Yes, we can go to the weekly and we can, but it even broke down, here. So I think, I don't know, man. I mean, of course, it's at some type of, high time frame support, and it's not been down here since in August 2022. But wouldn't it just be better to get some type of confirmation after you have a massive move to the downside? I think it's a bit crazy to read that 95% of people are long here after massive weakness.
It is, but then again, there's something very interesting in that website. If when you're ready, we can maybe look at it. I just looked at it. I haven't noticed it before, but if you check the that website, do you see after the pairs? Do you see the third column, or maybe it's the fourth column? Do you see the average short price and the distance from price, and below you will see a negative number of pips? So basically they are in loss on average. And if you look the other column, you see the average long price that everyone has and where the distance from current price, and you see they are also at a loss. So basically And if you observe the column going all down, the majority of the columns is negative, meaning that on average, the market participant, and this is, I don't know if these are retail traders or these are, I suppose they are retail traders. I don't know what kind of, where they get their data, perhaps from brokers, retail brokers, but whatever. And I suppose that's the case, because here you can see, and the question that I then ask myself is, why don't we see more winners, people holding winners, floating profits? They're floating losses. And maybe it suggests, what we have heard from many people, read many places, and we ourselves mentioned here, that it's one of those things we do. We hope when price goes against us, we hope that it's going to come back, and as soon as we go in profit, we become fearful. We want to close it and cash the profit, right? And maybe that's the explanation for why all of those columns, most of them, not all of them, are negative. Very interesting, wouldn't you say?
Yeah, it is. It is very interesting. I think this might be interesting. I mean, the code, the 5ers 10 is a $10 discount on Edgewonk. So if you go to Edgewonk and you purchase a subscription with Edgewonk, you will get a $10 discount on their subscription. We're also running a giveaway, so make sure that you grab the giveaway link. You'll also have the secret code for the giveaway in the description of this video as well. I'm still looking at EG here, and it's interesting to see that. So I guess does this mean that the people that are short are actually in profit?
EG, right?
Yeah.
Yeah. So not on average, right? It's on average.
On average, they're 45 pips in profit. On average, the ones that are long are 105 pips in loss. That's interesting.
Yeah, it is.
This was very interesting data. So
actually,
what this shows us,
this is basically volume profiling.
Is it?
Yes, because that's the average price that people who are long are, and then you say, okay, on average, when you reach this price, this is the place where on average people will be feeling pain, right? Their break-even point as a market as a whole. That's volume profiling. So but we can see here, you could of course you have other indicators to do volume profiling, but this goes in that direction. If you're long and you're underwater, where do you start? Where would you be taking your profits, right? Once you start going in break even, when you go starting in profit, you will start some profit taking. So you can say, okay, we can know in advance what some of the market participant will be doing when price reaches this area. Or on the other hand, if you see a position here that is in profit, and price goes back to that average break even price, it means that above this you will see people liquidating or closing their positions, right? Because they're going to be, and especially if you have a lot of people putting their stop losses at break even, you will see, okay, they will have their break even, their stop loss there. So if price comes back, you're going to have some influxes or not influxes, but selling orders coming into the market, right? The buys, the longs selling their buy position, they need to sell their position.
I think this data, I'm not sure this is correct, but it says that data is based on verified real accounts only and refreshed every 60 seconds. So I'm just gonna say it. I don't believe these numbers, because obviously what this tells us, it's not confirmed, but what this tells us is that it's accounts on my FX book. Okay, so the accounts connected to my FX book, which are refreshed every 60 seconds, and they're verified real accounts. I think it's actually accounts connected to my FX book that this data comes from, which would make sense.
Yeah, not broker data,
Exactly.
but my FX book data. So you need to have take that into account, because
Yeah.
But if they're verified, that does add a layer of
It
of
doesn't
confidence,
really,
right?
because you can fake it. You
Doesn't?
can use rent the MetaTrader. You can rent the
Oh, I
MetaTrader
see.
server, and then you can fake the results. So a lot of trading influencers, the ones that go to Dubai and then they rent the Lamborghini and they say, "Oh, I bought this Lamborghini with trading money," but it's actually rented, and they're leasing it, and they have
Okay,
rented a
okay.
MetaTrader server, and they create an account on my FX book where they basically take fake trades to show that they have insanely high win rate, but it's all fake. If that data is in here, that would that would explain that 69% of the accounts are profitable.
Yeah,
And this
yeah.
is a bullshit number right here. I'm just going to say that out loud. My the accounts on my FX book, there's no way, there's zero chance that the accounts on my FX book is 69% profitable. All of a sudden, there's a 69% profitability in the industry, which is makes no sense whatsoever. Makes no sense whatsoever. 70% of people on my FX book is not profitable. It would, however, make sense if it takes into account even the fake ones. So
That's a fair.
no,
That's a
I
very
mean,
sharp
I
point.
think my FX book is a great website. Nothing against them. I think they're really good. Pepperstone, great as well. But this right here, yeah, I don't buy it. I don't like it. I think it's way less. It needs to be way more transparent for me to believe these numbers. I mean, come on, it's really real verified accounts, but then all you have to do is just get a MetaTrader server, and then you can verify it. So yeah, that's
Then again, I know, and I agree with you. I do agree. I don't think 69% of the all of the accounts of a retail trader are profitable. That doesn't make sense to me. That's not how. That's not the reality of trading that I know, that I've known for years. It doesn't make sense. However, if we consider that there might be, some rotten apples in the industry, selling, whatever they are selling, and they are doing fake accounts, whatever way they're doing it, they wouldn't be in the majority, right? They would be, compared to the masses, they wouldn't be like thousands and thousands of people going to Dubai and doing whatever you just described. So it doesn't make sense to me, though. But still, I agree with you. I don't think it's 69% are profit. It doesn't make sense to me at all.
I mean, I'm sure that the profitability of traders that have an account with my FX book is higher on average than the whole industry as a whole, because if you have gone through the process of actually opening an account with my FX book, then you, first of all, you know about my FX book, and if you know about my FX book, you probably know more about trading than the average beginner trader.
Hmm.
Because when you first start out, you have no idea what my FX book is, and you're certainly not going to open up an account and connect your account to my FX book. So you're kind of in the industry in a sense if you have a track record on my FX book or is using the service. So I do think, but 69% is, I would say maybe 40% profitable would make sense. I would buy that. 40, look at maybe 30 or 40% profitable, which would tell us that 60 or 70% is unprofitable. I think that kind of makes sense. But to believe that almost,
The
the
majority, I don't
absolute
think it's
majority,
majority. Yeah, I agree.
no. All right,
Majority.
enough of that. Let's get back to the
Yep.
market. Let's see. I think what we had on this is actually an interesting. Wait, that's the wrong one. Let's share window. I think this is actually quite good example of because remember, most people are long EG, and even though it's on my FX book, we can assume that number, because it's an extreme number, is 95%. We can assume that most people are long EG. Now, what I'm thinking here is two things. We're at high time frame support, and we have people trying to catch a falling knife. I would say that's very normal with beginner traders.
Mm-hmm.
They see a big move to the downside, and they're thinking, I want to buy this because it's cheap. You look at this, for example,
It's a bargain.
and yeah, and you look here, and it's like, okay, it EG is cheap. I'm gonna buy here because there's no way it's gonna go all the way down here. So I'm gonna buy here, and then take TP somewhere here, and probably have that stop. And then you're like, okay, it's okay, good, and then it went down again. I'm like, oh well, you know what? It's gonna now it's definitely not going further down. So I'm gonna buy here, and then take profits up here. And then you'll basically just continue to see that move going down and down and down. But what you have down here is actually does hit that high time frame level. So I think if we're gonna catch a falling knife, at least those do so when price hits a major support. And that's actually what's happening now on EG. So I think it might be too early to go long. It's crazy that it's such a high number, but I would say that it's slightly too early to go long, because you can look at the weekly. I mean, yes, you had an instance here where you hit that level on the weekly here, and then immediately went straight up. But most of the time, you'll see the price is hanging down here for a while before moving higher. So I think it's a bit too early. I'm personally also looking for potential longs down here, but I'm looking for I need confirmation. I need maybe something like this. I don't know. It might be. I'm not sure exactly what I'm looking for, but let's go back to GU. Okay, not looking great here for my long on GU. I'm not gonna. I mean, I have my alert set. I'm not gonna try to. I'm not gonna. Usually, one sign of a bad sign would be if I, start looking at lower time frames that I'm not normally looking at. Maybe add a
Maybe,
few indicators and drawing tools that I'm not using.
yeah. Before you continue with GU, maybe I can show you what I see on EG
Yeah, go ahead.
compared to what you just mentioned. Well, if I go to the higher time frames, what I see is that we
I'm just
have
gonna
a
take a quick break. I'll be back in
sure.
just a minute.
Sure. What I see is we had a order block on a monthly, right? Remember that, and I consider this this retest to be the first retest. So, first thing, this is already to me the second retest. It's no longer fresh. So that those two things already, they diminish the chances of this order block being a great one. So that's one thing. The other that I see is that the bigger market structure, right? I know this is the monthly, but still the same rules apply. If you look at this low, right, it made a lower low, and the highs are making lower highs as well. If you're considering the bodies, and actually even also the highs, right? The other thing that I can see, and all of those things are in principle bearish ones, right? They don't tell us what will happen likely where we are right now, but it's telling you what's the overall picture of the market. The other thing we see is we have a quasi, right? The quasi is you can, wherever you have put your neckline, doesn't really matter if you put it there, if you put it here, you all can see that we have a quasi in the market where you have price coming from above, right? An established downtrend, and then breaks a swing high, whichever you chose, goes back and comes back. So that's, in that sense, there is a bullish reversal pattern. However, this is the last structure on the weekly for it to respond to. There's still a lot of space for this to to explore. So I wouldn't be too eager to think it's going to go long yet. And if we go one step lower, what do we see? We see price coming in. Remember, the bigger area, that's the monthly, and this lower half, that's the weekly order block. And if we go see how does price react once it gets into that, well, the monthly, you can see it comes into the monthly, has a reaction, and then has another reaction, but eventually it comes back to it on the third. This is the third time around. On the fourth time, it goes deeper into it, right? It penetrates that order block on the monthly more. And how does it respond when it gets to the weekly order block, which is this line here, the other color, the more light purple shaded area? What does price tell us? If you just listen clearly or carefully to what price is telling us, it hasn't, right? For price to move around, not move around, to move back, to do a reversal, it needs to break structure, right? It needs to, at a certain moment, break some crucial point, structural point, for it to continue going higher. There is no other way for price to change direction. It needs to start making higher highs. And what are the structure telling us? You can't see the higher highs because it's just one move down. But what we can see is that as price is getting into that order block on the weekly, we see that the daily is bearish. What do we see next? Does it have follow through on that bearish sign? Yes, it does. Right? It forms another one. So instead of seeing buying interest coming into the market as it is hitting some weekly demand area, it is not. It is showing weaknesses. So I recognize though that that this area is on a weekly time frame. This area is a great area to be looking for a buy, but I don't think the buy has presented itself yet. So yeah, that's my take on euro pound. And let's switch to euro dollar, because I think that's there you are.
I'm back.
There you go. It's the I was just on a recap. I see on EG. I see this area, this bigger area, as a very interesting area to look for a long. But if we go to the lower time frames, to the daily, I only see bearish structures being formed and still weaknesses. It's not, acting its part on showing signs of buying interest. And unless it starts breaking these and start forming bullish structures, I'm not interested, at least not in these time frames, to be going long. That was my take on euro pound. And we see continued weakness, daily order block, which we talked about before, right? We talked about this the whole week. Basically, I wasn't expecting, price was very, very, bullish, market structure, momentum, everything was to the upside until Lagarde started speaking, and it, just melted down, and it hasn't recovered. It haven't even shown any signs of wanting to recover. So unless there's some news coming in, and unless it starts, changing direction in order flow, it just looks very weak, and it's probably just going to, continue going sideways, not necessarily very steep to the downside, because we're already extended on a weekly range level. And we still haven't seen the NFP number presented. So I think in the expectation, or in the waiting time before the NFP, it will probably just, continue to be weaker and weaker as time goes by. That's my take on it, because of the impulsive move and the reluctance of for the buyers to come in. They should have come in and start forming bullish order blocks. And there is one. Actually, this is something I should mention. The buyers did come in, right? They did form one order block, one bullish one. But what happens in the next order block? Right away, right? The buyers try to stand up, right? They form this order block. What does the sellers do? The next bar, they invalidate it, right? That's very clear to me. That who is in control, right? You wanted to buy this market, not going to happen. So to me, I see a lot of weakness in EU, and it's tricky because we are extended in terms of range, and we have high impact news coming in. So I see a lot of uncertainty, and with that comes a little bit of a danger. But hey, it is what it is.
Can you perhaps take a look at do a quick analysis on GU, and then we have a few people wanted to take a look at gold as well.
Okay, sure. Let's look at GU. I'm gonna do it quickly because I think we have the giveaway soon, and so let's. GU, I left this structure for everyone to see, but 2 days ago, at the end of September, we invalidated that structure, right? So on the higher time frame, to me, it means that this structure is no longer there, so I need to eliminate it, delete it, and we are going to the next station. What is the next station? That's the next order block above us. So on the higher time frame, that's what I think the intention of the market is. That's where we want to be reaching. Whether we go there straight away or with a detour, that's to be seen. But that's in general what I think where we will be going next. Since I trade, or at least I interpret the market to be going from one station to the next, right? From one level to the next on the same time frame. So we're breaking a bearish structure and we're going to the next bearish structure, because there, price needs something to bounce off from, right? It needs to find sellers, and the sellers are in these supply zones. So if you look at the weekly, we are currently looking at a open candle that is bearish at the moment, but it's not relevant because it's we're just Wednesday and anything can happen before the week's close. So that's not something we can use. Other than that, I don't see anything on the weekly that's necessarily we broke previous high a long time ago, so there's nothing to the left, to the near immediate left for us to look or to analyze. And if we look at the daily, if this is going to be the head, assuming that we're looking for some kind of a temporary reversal, the structural, the neckline to be broken is this. We are so far away, we haven't even reached it. So although the daily is looking, you have some selling pressure coming into the market, it's still, overall market structure is very solidly bullish. So that's something to take into account. However, if we go to the lower time frames, we do see that we have started breaking some structure. That's the neckline of the on the bearish, so the bearish quasi. We broke the structure, and I would be if price is going to whatever this week, or maybe in the next week, if it's going to have some kind of retracement, retracement from this impulsive move, but going back higher, I would be interested in this little area here and between these two yellow lines. Those two areas are my interest for price to bounce off, if it is going to have, because it did form a quasi, right? So on the daily, there might be some continued, this impulse may have some follow through. This impulse right there might have some follow through as it retraces back and mitigates some order block above us. Maybe that can happen in NFP. Who knows? Right, and I would be looking for shorts from this area, but of course only in the lower time frames, because the daily isn't that clear. There is a order block there, actually a much fresher one. But we haven't retested. So when we get there and we do get some kind of a reaction from it, then presumably this could be the target, and if not, something below us. But on the higher time frame, I don't see this to be a great short, since it hasn't given us that much signals to the short side. I would say it's going back to find some support, and we're very far from that still. The supports that are visible in the market, the demand areas, are much lower than where we are. So for higher time frames, let's say the For swing traders, I would be, if you're looking for for which on the higher time frame, the market structure will give you the suggestion to be long, I would wait for price to come much, much lower than current prices. Other than that, also I want to mention that this is the second retest of this order block, this daily, right? So I don't trade those, and that's for a reason. Doesn't mean it cannot bounce from here, but typically they're not as effective in stopping price. So if it were the first time around, yes, this retest, that's certainly I would be trading that, but not this one. Okay, so that's GU. So the possible end or possible setup for, if price comes back would be something like in that scenario, price going back, do some reversal pattern on the lower time frames with that, and then moving away either to this low or maybe some structure below us, something like that would be great. But it's not relevant for today, and we don't know yet for the rest of the week.
So when you say you wait for price to come up to that level and then you look for a reversal pattern on the lower time frames, do you only enter the trade if you see that reversal on the lower time frames?
Yes, that's the confirmation. I need to see that the price is not going to go, well, typically it can do like a V-shaped recovery, just one wick going up, touching the area, and then coming back quickly without any, like sometimes it does in news spikes, a spikes candle, but typically that's not a typical way price reverses. Price reverses by decelerating first, breaking structure, and then trying to continue and then failing at it, basically a quasi, and then starts accelerating to the other side. So I need to see that on the lower time frame. If I don't see that, then I don't want to be going blind at it, just guessing that it's going to reverse without basing it on something. I need to have something. I need to give me some indication, even though it's never a guarantee that the price is actually, quantities are not going to work. They don't work all the time. But if even with the quasi, sometimes it fails. So if you're going to just go at it without any indication, your win rate will be much lower, and I wasn't able to make it profitable. So I wouldn't recommend anyone else either. But hey, maybe you can do it, but I wasn't able to do that. So I would say I need to see confirmation, and my confirmation comes from lower time frames, starting that process of reversal. The reversal has a process to be followed. It always does that, not always to the same way, but there is some process of reversal, and that's your best way to identify a reversal in the market, right? When it starts, because the market is fractal, it starts doing it on the 1 minute, on the 5 minute, on the 15 minute, and so sooner or later it will start doing it on the 1 hour as well. But by that time, I want to be already in.
Yeah, that's great. Yeah, I was looking for some a second opinion on my position, but that didn't really help me.
Which one is that?
That's the GBP USD long that I'm looking to exit that one now, because it's when I saw you describe, no, actually, you know what? I still like it.
Long?
Yeah.
Let me check the we are 50% of the ATR for today. And you can see how the candle in comparison to the previous candle is much, much smaller, meaning that's so far today, we haven't chosen a direction yet. So it poses opportunities, because it still has the potential to make a big move today. If it there's that chance, it doesn't have to happen, but there is still a lot of range that hasn't been used yet, used yet. So in that sense, I think it's beneficial if you're in a trade, regardless of the direction you're in. What else can I see? Let me check. Well, this is the second retest. Typically, that has a lower win rate, or of price, lower effect, lower chance of price responding or bouncing from it. But still, it is still valid, the order block. So we might see some kind of reaction, and that might be enough for someone who is only going for, I don't know, 20 pips or something like that. Because the time frame that I was looking is on the daily, and the daily ATR is 100 pips right now. So if you're not looking for that kind of move, 20 pips, then the fact that it's on the second retest doesn't necessarily mean it's a no-go for you or anyone else. What else? I see the same thing with it's less bearish though. See, the order block that we formed, well, same thing as with EU. We have some very strong impulsive move and very little buyers coming in. There's just one. We had one bearish. This is something that I saw this morning. Look at this. You have and this is typical of indecision. We have a strong movement to the downside, right? That's the impulsive move. You would expect that the buyers will try to push back, at least a little bit, maybe halfway through before they lose momentum. They never came to the market from this point. That's one thing. The other thing is we have a outside bar, which is, of course, bearish sign. The next bar, it gets invalidated. Let me zoom that in. It gets invalidated. But then it comes back into the, so it's a bearish sign that gets invalidated, which is a bullish sign, but it doesn't get follow through, right? So you have a bearish sign, a bullish sign with no follow through, and then it just sinks away. So I don't see where's the buyer. I'm sorry, Jonathan. I don't see at least they haven't come to the market yet. There is, however, of course, I see that too. There is a structure, right? There is a order block there, which has been squeezed and is still valid. So, and it is valid in the sense, it's fresh. It's part of the immediate retest still. So I would trade that just on that basis, not because of everything else, because the rest isn't really supporting the setup, but just on the fact that it isn't if I look for a lower time frame, I don't see any reason on the H2 to get in, and I don't see any reason on the H1. So basically, my filtering system tells me not to trade this H4. And I can see also, I'm not helping you, I know. I see a bearish order block there. And on the H2 also, I see only bearishness coming in, retesting, moving away, retesting that, coming away. So if the buyers are coming in, they're going to come in today. They haven't done so yet. They're not showing us their hands yet. So maybe it's still to come.
Yeah, let's see. I think it's time for the giveaways. We're at the 2 hour mark right now, and we have let's see how many. Got 2 winners today. One person is going to win a 10K bootcamp account, and the other is going to win a yearly subscription to Edgewonk. That's pretty cool. Edgewonk is really good trading journal, and being able to give away a yearly subscription like that is pretty cool.
Awesome. Yeah, I like that. That can be so valuable with in the hands of someone who is dedicated. Journaling can be so powerful.
Definitely.
All right, so yeah, I'm sorry I couldn't make your case more comforting, your setup, but
that's all right.
It is what it is. Yeah, I might be wrong, of course. I'm more often wrong than not on my trades, but yeah. Okay, let's see.
Right, I'm getting ready to select the Getting ready to select the winners right here. So we have one Aaron, and then we got one Eric. Both are winners because of the loyalty points. So that's great. I'm going to bring that up on screen shortly.
After we made sure everything is private enough.
Yep.
All right.
That should do it. Bring that up. All right. There we go. Got Aaron and Eric. Now, if you guys can confirm with your emails, I will confirm it. So the winner of a bootcamp account is Aaron, and the winner of the Edgewonk subscription is Eric. So all you have to do, Eric, is to confirm with the last part of your email, and same with Aaron.
Not being the @Gmail, of course.
Exactly. Yeah, I hope Alex will join as well. He's currently prolonging his vacation, but he'll be back. He'll be back soon. Right, so guys, you have to actually confirm live in the live stream. If you can't do that, then we will draw 2 more winners.
Yes, there is a time running. There's a timer running. So you have limited time to react. You got to be fast. You have to confirm that you are present when we draw the winners. Otherwise, you can win the prize. Is this
okay, we got Eric? Yeah, Eric is confirmed.
Yep.
Now we're just waiting for Aaron. Right, Aaron is confirmed. No, Eric is confirmed. But Aaron needs to confirm. Come on, Eric. No, Aaron. Aaron.
Nothing.
Right, time is out. We'll do a new one for Aaron. Okay. All right.
Do we have a new winner?
We do. We got Steve.
Okay. Steve. Are you there, Steve? We're calling
Steve
upon
from
you,
the UK.
I'm sure Steve is in the house with us. Hopefully.
We got Steve from the UK. And I want him to confirm his email. I'm going to bring that email up in just a second.
Yeah, congratulations, Steve. Hope you can claim your prize.
All right, doing 2 minutes. Feel like this could be a long live stream. Let's see.
There you go. We got Steve.
There we go. That's him. That's Steve right there. Nice. All right. Congrats, Steve, and congrats, Eric. You both have one. So Eric, you have a yearly subscription to Edgewonk, and Steve has a 10K bootcamp account.
Nice.
Now, to everyone that is sending me email asking about the giveaways, the people that are taking care of the giveaways and sending all of that out is currently and on the office. They have a couple of national holidays, or I think started yesterday, perhaps going on for a couple of days. So it's probably going to take a couple of days extra to get the to get the to get all the accounts set up and the emails to be sent out. So yeah, you'll have everything probably set up most likely next week. I think should be done next week.
Yeah, most likely.
All right. Yeah, I did get your email, Alfred. I will get to that after the live stream. Don't worry about that. Okay, so that's it for today. And yeah, and about the One for All challenge auditions. So I haven't been able to get it set up. Now I said I'm going to be able to set it up today, and I've actually tried every day to get this set up for the live stream, which it kind of sucked that I wasn't able to get that set up. But there's some limitations with the streaming platform that we're using right here. So the whole idea was I wanted to run the clips with audio and everything and have them running in the background and for us to go through all the additions. But when I try it, it's supposed to be working. When I try it, there's no sound, and that makes little sense because obviously we're just looking at people talking without sound. So we'll figure this out. I'm gonna talk with the team over at Discord, see when everything is starting. But we'll figure something out here. And if it doesn't work, then it doesn't work during the live stream. We'll figure something out. Anyway, this week has been great. Lots of I think this week has been really good because on Tuesday we had that we talked about. Yesterday we talked about back testing, and then today we talked about trade journaling. Two very, very important things, right? And combining those two webinars and workshops or live streams or whatever you want to call it, it gives you a lot of knowledge and a lot of information on how to not only improve your current system, but also how to create new systems. And I think that's a very important, man, I'm tired. I feel like I'm forgetting what I'm saying. I help me out, Victor. We got NFP as well. NFP on Friday, guys. NFP on Friday.
No, this week was was packed full of content, good content. I think for everyone who weren't there for the other live stream, go check on YouTube, rewatch them, because the fact that it's not live doesn't take away that they're actual actionable tips and advice is there for you to be a better trader step by step. And that's our goal. If you keep on coming here, and if you can even go to our live stream that we had before, there are gold nuggets here and there for you to and all of this free for everyone, whoever is willing to have the dedication, the longing to be a better trader. That's the only thing you need to have. So I think it's been a great week. This week is very promising because of Friday NFP, as you mentioned, NFEC nowadays instead of NFP. But yes, NFP.
That's right. That's right.
It is. You got to be careful. We know from statistics that's one of the account killers, right? A lot of people taking trades with the NFP end up losing their account. So don't be one of those numbers in the statistics. Keep your account safe. Lower your risk, perhaps close the position altogether. Do whatever it's needed. Just make sure that account survives. I think that's it. We can wrap it up. I'm very happy to be a part of this week with you guys. So I will be having a workshop in about 35 minutes on Discord for everyone who is interested. So and on the server of the 5ers, we have every weekday we have live streams for your benefit. We discuss issues, we try to help each other, and we talk about interesting topics that like we did this week on YouTube. We continue with that mentality of helping, sharing knowledge for the trader at home who wants to make this a living, and who enjoys trading like we do. That's our passion, and you want to make some money from all that thousands of hours that you probably already put in. So this is the place to be. I invite you all.
This is the place to be. Yep.
So I invite
guys.
you all for next week. And if you can, join us in the Discord today or any other day this week. Have a
that's
great
it, guys.
week,
See you
everyone.
guys next week. And the Discord link is available within the hub. You go to the hub, you log in, and you go to your program. It's for everyone that has an evaluation account or is funded with the 5ers. Make sure you join the Discord if you're not in already. That's where you could say that this is the party, but the after party is always going to be in the Discord. All right, guys, take care and see you all next week.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at the 5ers. We'll see you in the next one.